Good afternoon. It's Tuesday, April 9, 2013, and I'd like to welcome everyone to our live Ask the Analyst webcast today. We've invited two grain experts to provide their outlook ahead of tomorrow's USDA crop production and WASDE reports. My name is Chris Grams, and I'm with the CME Group, and I'll be your moderator this afternoon. Before I introduce our experts, I want to remind everyone who's joining us live online today that you can submit questions for our analysts anytime during the event, during the webcast, by typing questions into the lower right-hand box on your screen. So please begin submitting those questions now if you do have them. Also want to note that this panel will be posted to our CME Group TV channel. An archived video version of this will be posted to our CME Group YouTube channel, youtube.com/CME Group TV, shortly afterward. At this point, I'd like to briefly introduce our experts. On my far left, we have Greg Wagner, who is president of GWX Ag Advisors. For 25 plus years, he's worked with the agribusiness community exclusively and provides cash marketing advice and risk mitigation strategies tailored to agricultural producers and end user needs. His perspectives on agricultural markets have been extensively featured in broadcast and print media both in the U.S. and internationally. To my immediate left is Jerry Gidel. He's the chief feed grain analyst with Rice Dairy. Jerry joined Rice Dairy as chief feed grain analyst in 2012. He has extensive grain market experience since arriving at the CBOT's grain floor in the 1980s. He previously provided risk management and market analysis for North America Risk Management Services, a consulting and introducing brokerage firm, working with ag and livestock producers, cattle feed yards, and commercial food operations during the last decade. Since coming to Chicago, his grain analysis talents were also utilized at various brokerage firms such as Payne Weber, LIT, Dean Witter Reynolds, where he was a senior grain analyst in the 1990s. So without any further ado, I'd like to ask our experts to provide some perspective what they see ahead of tomorrow's USDA grain reports. Greg?
Thank you, Chris. This is, this April WASDE report is going to be dominated by how the USDA is going to integrate some of the grain stocks numbers that came out on March 28th. It's interesting that we had both a prospective plantings report as well as a grain stocks report, yet the grain stocks report has dominated both price activity as well as the trade's interest. So tomorrow at 11 a.m., that'll be Wednesday, April 10th, USDA will provide answers. As far as expectations go, generally what's characterized, I think the ending stocks numbers, what people are looking at, the trade expectations are pretty wide. There's a wide range both in the corn, soybeans, and wheat, from the low end to the high end of the range, and we'll see where USDA ultimately comes down with the numbers. Right now, you're looking at corn ending stocks being 824 million bushels. That would be up substantially from the 632 million bushels that we were carrying in the March report, and that is going to come in the form of feed and residual. And to the extent that the USDA brings that into or incorporates that into the balance sheet is going to determine really what the ending stocks level is right now. In regards to corn, the other demand side of the equation, both corn grind for ethanol as well as exports, I think it would be premature for the USDA to lower either current estimate, so those should essentially be unchanged. But it is, again, the corn stocks estimate. It's interesting to note that we've had a dollar break in the corn market since this report came out, and that's been the negative response. Now, I would note the high end of the range is for this is 925 million bushels, which would be pretty shocking. Now, soybean ending stocks levels, the trade expectations are for 137 million bushels. Now, USDA came out with 125 million bushels. Of course, that's what they're currently carrying from the March WASDE. Of course, again, you found 999 million bushels of physical supply as of March 1st in the grain stocks report, which was released on March 28th. And again, the USDA is going to have to incorporate that. Now, keep in mind, I think the trade has to keep in mind that right now we are bumping up against the export sales shipment numbers that USDA is currently carrying. So at 1.345 billion bushels, export inspections, the stuff that's out the door, already afloat, is roughly 91% of the total, and we have 20 plus weeks left remaining in the marketing year. That may be mitigated by either reduction in the crush, also sales going to sales starting to migrate to South America. China, I would add, has also reduced their imports beginning in January. They have negative crush margins in China, and currently you have a situation that's developed regarding this avian flu. In the past, this isn't a first occasion where we've had this type of domestic situation develop in China. For instance, 2003 you had SARS, 2007 you had the blue ear pig disease. Neither have really impacted exports. Wheat stocks numbers 731 million bushels. I think all things considered, these numbers are essentially going to drive the market going forward. If we look at world ending stocks, both for corn, soybeans, and wheat, as well as South production numbers, South American production numbers for corn and soybeans, not looking for any particular market-moving information or input from USDA on that. It's going to be the grain stocks numbers that are really going to move the market tomorrow.
Very good. Thank you, Greg. Jerry, from your perspective, what are some of the more important components of tomorrow's report that you're going to be looking at?
Thank you, Chris. Greg did a fine job of kind of covering the numbers for us here. Looking at the grain stocks, definitely is the numbers that will be the big market mover potential. I think that to some extent, as Greg pointed out, we've had a dollar break here. I think actually some of the initial numbers that came out right after the stocks report, that was 380 million over expectations, actually had those numbers closer to 900 to 950. I think maybe since then some of the trade kind of started looking at the combination of the first and second quarter of feed demand and did more of an average between the two, because we had a 13% increase in the fall quarter on feed demand, and then we had the 30% decline year over year this last winter quarter. That was the real shocker. Put the two together, about 6 or 7% down on the first half usage, and so that maybe tempered some of the enthusiasm about how negative the market should or shouldn't be. We've actually had a little recovery over the last couple of days here, combination of maybe being oversold, and also the weather situation here across the actually the U.S. Last year we had fabulous weather. We had a very warm and dry March, and we were off to a great start on plantings. And particularly in the southern areas, the Delta and Southeast, we had a tremendous amount of corn already planted. And this year, we've got a little bit of planted in Texas and maybe Louisiana, but the rest of the Mid-South and Southeast, and along with now the Midwest, is getting some additional rains, being a big factor there on some of the mindset of last year. I think the next week we were like 17% planted on corn, and we'll not likely to be anywhere close to that when the USDA starts its weekly crop and planting progress numbers for corn. The wheat numbers, Greg kind of ran out a little time there looking at those a little bit. We'll kind of backtrack into that one a little bit. Wheat stocks were also slightly higher than expected. I, too, don't really expect a lot of changes, though, from the USDA on wheat. From the standpoint of the feed demand numbers, there still were, on a seasonal basis, a stronger number, and I think both of us heard a lot of expectations for wheat feeding in the Southwest here for this coming spring. And so I don't sense that the USDA is going to make a huge change. They might make a minor one of 10 million or something like that, but it's not going to be a big factor. The big factor in wheat right now is what kind of crop are we going to have out in the plains. We just recently had their second crop conditions update. The beginning one this year was the second or third lowest one we've had for this time of year. And that's really dominated by the plain situation. The drought has mitigated somewhat east of the Mississippi, but still there hasn't been a tremendous amount of soil recharge from Texas Panhandle northward all the way to Montana, really. South Dakota and that area also still very dry. We just had finally some rains in Nebraska and parts of Kansas here that maybe have provided a slight improvement. But interestingly enough, the one condition in the wheat right now is that it's been so cold. We've actually got some fears of some wheat damage here from cold temperatures even tonight. So weather is going to continue to be a huge factor as we go forward, but the initial responses people will be looking at tomorrow in corn and wheat will be what kind of changes we do or don't have. The soybean side of the equation on that stocks report, 999 million number that came out was about 50-60 million over expectations, and the numbers there. Last fall we had a abnormally low stocks number versus expectations, and there was talk that maybe we overestimated the crop then, and then now with this number it's maybe a little higher. I just sense that we had a huge amount of stuff in the export channels, and I think then that's what the USDA is going to be looking at. And so I too don't anticipate a lot of changes in the ending carryover stock, but the strong shipments at this point really forces the USDA to move that stock or export number they currently have from 1.345 up 15 or 20 million 15 or 20 million bushels, and I think that should be somewhat of a stabilizing situation when we get those numbers tomorrow.